here's Mr. David Fu. Take it away, David.
I don't know about you, but I'm really sick of this coronavirus thing. Isn't it awful? I mean, you know, I miss you guys. I miss you guys. I mean, I miss hanging out with you actually in person. And, you know, this is just, it's just not the same, right? It's just not the same kind of environment we live in. We really have to do better to try to beat this disease and move on. Well, thank you very much for having me today. I'm going to share my screen right now and get to my PowerPoint. Here we go. Okay. And thank you very much for having me today to talk about COVID and its impact on commercial real estate in our marketplace. Are you picking up my PowerPoint now, Tomas?
Yes, we see it.
Okay, great. Thank you very much. So let's see. So I'll tell you a secret about public speaking, and always make sure you tell them what you're going to say it, and then tell them what you said. So this is now what we're going to do is that tell them what you're going to say. In terms about coronavirus and how it's impacting commercial real estate, what we know already is that change is already here. Okay? And that discussion is then going to bring us to a focused discussion on, really on office and retail, but it actually change is coming everywhere. In this discussion today, we're going to talk a little bit about the court system and unlawful detainers and foreclosures, you know, about the payment of rent and mortgage. We're also going to talk a little bit about insurance, leases, and contracts. I'm going to talk also about a bigger problem, or not a bigger problem, but also a big problem, which has accompanied the advent of coronavirus, and that is concerns about racism and bullying. And I'm going to close by telling you it's not all bad news. So first, I'm going to tell you a little about me, because although I think a lot of people know who I am, a lot of people don't. So my name is David Fu. I'm a lawyer here in Arcadia, and I'm the principal of a 4-attorney firm, which focuses on general real estate and business transactions and litigation, and we also do estate planning. I have a tax degree as well. Before I became a lawyer 24 years ago, I worked as an investment real estate broker. I'm a member of the Realtor organization and a GRI instructor. And I'll tell you now that some of the material here today, you may have seen in a prior presentation on May the 27th. But what's interesting about this is that I made some predictions there that have definitely come true, and we'll talk about that a little bit. Okay. So before we get into the meat of it, I'm going to remind you today that I'm not giving anybody legal or tax advice, that no attorney-client relationship is being formed with any of you out there, although I think a lot of you are my clients. I'm going to remind you that things are changing really fast. So you need to confirm any of the information that's provided here. And that a lot of the things that I'm going to tell you are really my opinion, of course, and to some degree, speculation about things that are happening or what will be happening in the future. We're going to be doing a little bit of futurizing today. We won't be talking about the new CAR COVID-19 forms, which are no longer new. They've been around for a few months now. And I remind you to wash your hands a lot. Okay, so let's go on. I want to explain a little bit about my background in real estate, because it explains a little bit why we're going to talk about this today. So I started in real estate in 1986. I started in residential in the San Francisco Bay Area. Although I grew up here in Southern California in Beverly Hills, I went to Berkeley and lived in the Bay Area for some time and started in residential there. I then moved back to Southern California in 1987, and I became an investment real estate broker where I sold shopping centers, apartment buildings, office buildings, industrial development land. I had a very interesting, very highly varied career, which spanned both the conventional sales as well as the real estate auction market. I'm a member of NAR and CAR, and as I mentioned earlier, I am a GRI instructor. I teach the risk management course for GRI. I've also taught for NAR the fundamentals of commercial real estate. In the law, I've practiced since 1996. I was the co-chair of the executive committee of the Real Property Law section of the State Bar of California. It's now called the California Lawyers Association. I continue to serve as an advisor to that body today. The Real Property Law section is comprised of about 6,000 real estate lawyers across the state of California from one end to the other. I've also served on the advisory board for the Continuing Education of the Bar, which is the publishing arm of the State Bar of California, regarding the real property publications that it makes for our industry. And I'm a frequent continuing ed speaker for lawyers, and I speak frequently for real estate groups. So why do you care about that? Well, the reason why it's relevant to our discussion today is because my exposure to different elements of the legal community, all in real estate, allows me to participate in conversations which view the changes in real estate comprehensively from one end of the state to another. I know real estate lawyers from San Francisco to San Diego, and we get together regularly to talk about things that are changing, problems in our marketplace, problems in our court system. And I've acted as a direct participant in solving some of these problems. I was also the chair of the Jenny Commission, which is a commission that conducts investigations of judicial candidates to become judges in our state. And these different views give me an opportunity to have a little more insight into some of the issues that we're facing in the real estate legal community. So what I've said previously, and as being borne out today by what we're seeing, is that COVID-19 is changing real estate faster than before, and actually changing our entire society. I don't know about you, but it feels like March of this year was a really long time ago, right? You remember that? Being outside, eating in restaurants, shopping at Nordstrom, going to eat hot pot with your friends, having a drink after work. These things have all, of course, changed for us. It's an incredible change, which has changed our society and changed all of our habits, the way we do things and the way we think about things. These things constitute powerful forces that are pressuring our real estate market, especially in the commercial spectrum. I predicted at that time, and when I did this similar talk back in May, that we were going to see a lot of pressure on commercial real estate. And on July the 20th, the LA Times reported the sale of the US Bank Tower. Everybody knows who what the US Bank Tower is. Remember, this is the building that the aliens destroyed on Independence Day. Well, that was Hollywood magic. Of course, the aliens didn't destroy the US Bank Tower. It's still there. It's still one of the tallest buildings, like west of the Mississippi. But it was sold in July. It was sold to the group that owns the World Trade Center in New York. And the background of that sale was concerns about the continuing viability of high-rise office buildings, especially because as densely populated areas, they raise a lot of questions about the spread of coronavirus. And at that time, the company that owned the building, OUE Limited, out of Singapore, sold it for $430 million, which constituted a profit over what it paid in 2013, but a steep discount from what they had reported as what they thought the property's valuation was in its annual report the previous year. It had been reported as being valued at $650 million, and they sold it for $430 million. Obviously, that's still a lot of money, but it gives you some idea of what some people are worried about the impact of coronavirus on things like office space. Now, this was really just a manifestation of a trend which has been coming for some time. Office services, customer service, and service economy jobs are all moving toward telecommuting, but they're now moving toward telecommuting at an accelerated pace. Recently, I saw my doctor, and I didn't actually see my doctor. I just got on the phone with him. And it's something that the trade calls telemedicine. Telemedicine? I mean, when you go to see your doctor, you hope you're going to see your doctor. You wonder how the doctor can treat you without seeing you. This is an indication of how fundamental beliefs and how we operate as a society are changing, driven by the requirements of COVID-19. But you can also assume from that insurance companies pay doctors to see you, right? Most of us have health insurance. The Affordable Care Act requires that we have health insurance. But I asked my doctor, hey, do you actually get paid for these telephone consultations? And he said, yeah, we get paid, but we don't get paid as much. Well, what do you think insurance companies are going to do with that information? Insurance companies want to keep their costs down. And so they are likely going to require doctors to continue to pursue telemedicine as a means of treatment or a means of diagnosis and visiting with patients because it's cheaper. And if it's cheaper for doctors to practice telemedicine than it is for them to see you, they don't have as much need for all those fancy examining rooms. You remember when you go to your doctor, it's one doctor and he's got 7 examining rooms and you get parked in one for 45 minutes while you wait for him and he comes to see you for 90 seconds and then leaves. Well, the reason why there are 7 examining rooms for one doctor is because it helps him to see so many patients quickly. He can make his time more efficient to see those patients by having them all in sort of a holding pattern waiting to see you. But if that consists of you being on a telephone and a blinking light on a hold button instead of sitting in a examining room, then probably that doctor is not going to need as much space in the future. Where we really see this impacting us most quickly is in the tech sector. And what we're going to see, and I'm going to show you very, very quickly because I think that this is not a complicated thought anymore, is that many tech employers are now having people work from home and in many cases have decided to do that permanently. The New York Times announced that Facebook had announced that they were doing this on May the 21st. Zuckerberg made a live streamed announcement to his staff saying that most of their employees will be allowed to work from home. Because of coronavirus, though, they said it caused them to reevaluate the requirements that employees be in their shared office space. And they said that within a decade, as many as half of the company's more than 45,000 employees would be working from home. Similar decisions were made by Twitter and Square, both led by Jack Dorsey. Dorsey said that those employees from those companies would be able to work from home. Google said to its employees that they could work from home through the end of the year because of concerns about coronavirus and because we are still uncertain about what the timetable is for a return to normalcy. The New York Times reported that white-collar companies are in a race to be the last, not the first, but the last to return to the office. And they had observed a number of different large companies, Google, Facebook, Amazon, Capital One, were all extending work from home policies. Even though the government wants us to go back to work, the truth is that businesses have said, well, we're not really in a big hurry for that. Part of the problem is, of course, the concern that there's liability to the employer by bringing employees to a large collective workplace. And the other problem, of course, is that there's a tremendous cost that goes with preparing office space for large groups of people to be there, to decontaminate that office space on a regular basis, maybe more often than daily, and to assure the safety of those employees. Nationwide Insurance closed 5 offices around the company and decided to have 4,000 employees telecommute permanently. As we said earlier, Twitter's already decided to have many of its employees work from home. These things constitute unprecedented changes in work culture. What we saw in high-tech space was that, the modern kind of high-tech looking office, right? The Google campus where you had a large space, people getting together, playing ping pong. They're providing a common lunch to people, lunch rooms, vending machines that are free. They've got baristas and ice cream vendors within their own space. You don't have your own office. You move around from cubicle to cubicle. All of those kinds of things that have kind of created this cachet about modern high-tech space. Well, it's taking another step forward now to say that, well, yeah, we like that space and that arrangement for the synergy between people, but at the same time, we're finding that we can accomplish this through Zoom conferences, and then we don't actually have to bring all these people together. And as long as it's safer and cheaper to have them work from home, it's something we're going to explore. Okay, so What does this say? It says that, this is perhaps a further manifestation of clicks over bricks. More businesses are moving to online platforms, and that's not just office. Of course, we know that it's happening in retail as well. So therefore, less office space and less retail space is needed. I mean, even medical space, which is what I was talking about a little bit earlier about my conversation with my doctor. Even medical space is going to have pressure on it. And, for those of you in commercial who have any experience with medical office buildings, they are already very complicated investments. Number one, doctors are generally well-financed and very well-educated people. They are very particular, so they're very difficult tenants sometimes. They can be very, very demanding, and their needs are very different. So there's a lot of money invested in improving their space for their needs. I have a client who's a medical doctor, and we'll spend $20,000 just to build an X-ray room for him in a facility. So what happens when we try to offload some of the needs for that space? It means that doctors can have much less space, can work more in shared space with other practices, which means that we have a contraction of the demand even for medical space. Despite the fact that we have the aging baby boom, the post-World War II generation starting to retire and having more health problems, if we can treat more of those people with telemedicine, it still means potentially less office space needed for medical doctors. The other thing about the aging baby boom, and I count myself among that group, is that as they age out, as that generation dies, there will be fewer elderly people needing to see doctors, and yet likely even further contraction to medical space. So if we see this contraction in things like office, retail, medical office space, it raises the question, what happens to janitors? What happens to the downtown Starbucks baristas who are usually serving tens of thousands of people walking through the door every morning when they go to work? What happens to the retail clerks in the businesses close by? What happens to the Uber and Lyft drivers who are taking them to and from work? Speaking of Uber and Lyft, earlier this year, UBS issues different investment reports, and they issued a report talking about 7 investment themes that they could foresee arising out of the COVID-19 pandemic. And number 6 on their list was sharing is not always caring. They said, we believe that COVID-19 has altered the path of some sectors within the sharing economy. Given the trends toward remote working and away from office densification, we expect to see disruption in the rise of co-working or flexible workspaces. On ride sharing, we may see some consumer apprehension to share a vehicle with an unknown passenger who could be sick. You don't know if you're going to have to get into a car with a driver, you don't know how many people that driver has seen. Earlier, I talked about high-tech space with, creative recreational space with ping pong tables and lounges and large lunchrooms with complimentary lunch for the Facebook employees. Well, those people don't necessarily want to be next to somebody else right now because you don't know how dangerous that is. And so that too is pushing this question about sharing, the sharing economy, and closeness to other people, which is causing a reevaluation of these configurations in the commercial real estate space. Obviously, we're seeing a very dramatic reduction of retail shopping. They observed within the UBS report, online shopping, which currently represented roughly 12% of retail sales, has soared above the economic shutdown, and they believe that that trend will continue. I myself was never a big online shopper, but since the pandemic, I of course have gotten used to shopping online just like anybody else. I always had questions about it. Well, if it doesn't fit, I can't return it. I like to touch the stuff. I like to feel the inventory. I have gotten used to the idea of just ordering something. And when it comes in, if the color's a little bit off, if it doesn't fit quite right, if I don't like the way it hangs on my body, I just put it back in the mail and send it back. Okay. And so these things are bellwether changes in our economy, which had already begun. We talked about the Amazon effect in the past, and that's a question of whether Amazon is putting brick and mortar retails out of business. We were already experiencing growing pressure on retail because of Amazon and e-commerce generally. That has accelerated dramatically during the age of coronavirus. Again, retail sales plunged by a record number in April. It talked about that, or the New York Times talked about this, and retail sales and factory output. Retailers dropping dramatically. The New York Times reported about Walmart becoming a pandemic lifeline. Walmart was an unusual example for big box stores because its sales online surged 74%. And Walmart had done something that was very lucky. It had already begun to understand the impact of the Amazon effect on its sales. And so it began to change the way it configured its stores. It began to create a different network of a different range of options for buyers to purchase things from Walmart so that you could order online, pick up at the store. They started to use their stores as distribution hubs instead. And so they already had a leg up, even on companies like Amazon, by getting ready. The advantage that that Walmart has over Amazon is that it has 5,000 stores. If any of you have seen an Amazon distribution center, those things are like 1 million square feet. And so they're just amazing facilities, but they're not on every street corner. Walmart is in virtually every neighborhood in this country. And so it has the ability to serve as a mini distribution hub to get goods to their users who can purchase those things online and get them very quickly. It may also be that people like the convenience of going to their neighborhood Walmart store and picking up stuff that they purchased online. Okay. In addition, Walmart was benefited a great deal because of the reputation for low prices. And so, people were all lined up for their toilet paper in the early going at Walmart to pick up their things there. There had already been a broadening gap between mall-based chains and other big box stores and being able to switch to this kind of online format. So this crisis has pushed these kinds of chains into a lot of danger because they cannot compete with online presence. So, and we'll talk a little bit more about bankruptcy in a minute, but in the article that was cited by the New York Times, they referred to bankruptcies in May, JCPenney, J.Crew, Neiman Marcus, and Stage Stores. And in a minute, I'll go on and talk to you more about bankruptcy, which is really alarming and also talks to us about its impact on commercial real estate. Again, this article talked about the fact that Target's online sales helped it a great deal, but it made this observation, okay, that their online sales jumped 141%, but their net profit fell 64% because their operating costs rose dramatically. And obviously, Target has to keep those people safe to be able to keep those goods flowing. And the cost of maintaining those facilities was dramatically higher than before. They noted here that Target was setting aside $500 million to maintain safety standards at their stores and to pay them higher wages. Okay. Again, the Times had reported the fact that Target was in a better position because it had prepared for this, acknowledging the onset of online retail. Well, so what does it say about retail? Okay, well, retail stores are in trouble. They were already in trouble before. The larger stores with a lot of neighborhood presence are now converting themselves to be sort of fulfillment centers for their online presence. But you've got to agree that, a nice store like Nordstrom, which is designed and outfitted and improved to cater to a certain, kind of upscale kind of client, well, is that store really going to be able to afford to pay the same kind of rent and the same kind of improvements when they're actually using that store as a warehouse? Generally, warehouse space is going to be cheaper. So what we're seeing is all these things are creating social changes. That COVID-19 has accelerated changes which were already coming in terms of accelerating our reliance on technology and that reliance on technology allowing us to cocoon more, for us to be able to stay home and do our jobs, and to have all of our needs met through some kind of online delivery platform. This is contributing obviously to pressure on retail space, because retail is now competing for fewer tenants. It likely means more vacancy. So let's turn now to the court system and about the law and how these things are changing, because they affect you and your clients as well. What I want to remind you at this point, and I should have done this a little bit earlier, is remember, I'm a lawyer. I can give legal advice if I want to. You're not a lawyer, probably. You should not give any legal advice, okay? But your clients are going to want to talk to you, and we'll talk a little bit more about this in a minute. This is a time when they need you more than ever. And so you should be at least modestly familiar with certain concepts so that you can recommend to them to get advice from other people about things. So in the next couple of minutes, we're going to talk about the court system now, unlawful detainers and evictions, foreclosures, the payments of rents or mortgage, whether or not there's any insurance to help you out there, and also some contract defenses, things that people are now trying to assert to the duty to pay rent, okay, as a defense. So LA County courts had closed in March like other businesses had, but they reopened in June. And during that time period, they created a brand new online video appearance system, which was proprietary to the LA County court system. Today, they prefer court appearances. This morning, I was on a very important hearing, which was all conducted by video conference with the judge. Evictions were suspended, as most of you know by this point, and it appears that they've been suspended to September the 30th. But that always depends on what local cities do in terms of their legislation to continue to suspend evictions. The governor has given authority to local jurisdictions to suspend evictions, but it's up to the local cities to actually effectuate that suspension of evictions. LA County courts have said there will be no civil trials until 2021. What does that mean? Well, you have a trial, no civil jury trials. You have a right to jury trial in our civil system, which is provided to you by the United States Constitution. But in order to have a jury trial, you need to collect large groups of people to be considered in the jury pool. And right now, the court system finds it's impossible to collect those people together and put them in an environment where you can maintain social distancing and provide for their safety. And so they have just decided to suspend civil jury trials until 2021, obviously hoping that the numbers will trend in our favor, but also they're talking about taking over local space. Or I talked to one courtroom clerk that said that they were looking into taking over a church that was close by so they could use that as a staging area for potential jurors in order to be able to have enough room for people to meet and wait for selection for service on a jury. Fannie and Freddie, you may recall, had banned foreclosures until August the 31st. So for any loan that was a Fannie or Freddie Mac loan, they had suspended mortgages until, foreclosures until August the 31st. California's rule is it's banned foreclosures until 90 days after the pandemic emergency is lifted. Some organizations and some groups have talked about whether or not there will be a 12-month forbearance following the lift on foreclosures. But I don't believe that that's been effectuated by law or become set in stone in any particular environment yet. What I've told people before is that, regardless of what happens with unlawful detainers or evictions and foreclosures, eventually you'll have to pay the rent or the mortgage. And there may be different rules for each situation that are going to be required. But so therefore, I advise people, if you can pay it, pay it. having that pressure later is really not going to help you. There will eventually be unlawful detainers and foreclosures, and you just don't want to be in that position. But as time has worn on, I've changed my position on this a little bit, and at least as far as an observation is concerned. The question is, what happens next? We have been in an environment where some people have not paid their rent since April. So April, May, June, July, August, that's 6 months. What happens when they have to start to pay back their rent? What we see in general in our society is we are seeing a lot of democratizing social pressures, is what I call it. And these are things which may lead to undermining and attacking real estate ownership. So what happens to those back rents when the eviction moratorium is lifted? It may be that, then what happens to mortgage arrears? It may be that laws are passed that say that those monies can't be recovered. There's talk wherever you look now about new possible legislation to require partial or maybe total forgiveness of back rents and mortgage payments. Think about other democratizing pressures at work right now. Think about the Black Lives Matter movement and this question of defunding the police. I don't express any opinion one way or another. Certainly, I agree that Black Lives Matter. As far as defunding the police, I personally don't really understand how that works. I understand the premise of it, but think about what that means in our society and what the pressures are, the energies and the power that are moving in our society toward this idea that we want to have less power concentrated in the hands of the government. This moratorium on foreclosures and evictions, they were already novel. I've been a lawyer for 24 years. I've been through several downturns and large scale recessions. I've never seen anything like this. It didn't exist in 1994 during that 1991 to 1994 recession. It didn't happen in 2008. And yet they're talking about, we've done it now. We've actually done a moratorium on foreclosure and eviction. What I'm saying about this is that the pendulum swings. And what we've seen with the election of Donald Trump into the White House was a powerful movement of our country in a conservative direction. And I'm not going to get into a lot of politics here, although quite frankly, I'm very critical of the president. But what I'm saying is that it is often said about society and about concepts and attitudes that it's a pendulum that swings from one side to the other. And so what we've seen, really, if you think about it, is the pendulum swinging to the right, with conservatives managing to elect a president in this country. And that it may be, with everything that we've seen, the conduct of this administration, the coronavirus, now we're seeing the pendulum swinging in the other direction, to the left. And that theoretically means heavily democratizing forces at work that could say, we think landlords are evil. We think that that foreclosure is evil. We think that these little people are entitled to relief from these things, and that we would rather place that burden on the backs of landlords and banks, who are the mortgage holders, right? Rather than imposing on, the masses the pressure of having to get caught up with these kinds of back payments. We don't know, but I would urge you to keep reading your newspaper. You can definitely see signs of this in proposed legislation coming out of Sacramento right now. Let's change gears now and talk about insurance. A lot of people try to use insurance to try to save themselves from coronavirus losses. Okay, so if you own a business or if you own commercial real estate, you likely have something called business interruption insurance or rent loss. In the past, insurance companies have said that this is not likely to be covered. Okay, and therefore they're likely going to tell you that you don't have coverage. However, it's not impossible that you actually have insurance coverage for this. There's a lot of things that you have to overcome. We'll get to that in just a second. One of the observations is that many commercial general liability insurance policies exclude virus or bacteria losses. But there might be another type of coverage which is accessible to you in terms of getting this coverage. And what I say is that for most people, it's impractical to find out because it's very expensive to litigate this. Why does it matter to you as a commercial real estate broker? What matters to you is that you're talking to your clients right now about things, and every time, you know, I've done your job before. I was a commercial real estate broker. You need to find things to talk to them about. And what do they want to talk about? They want to talk about things that they care about. They want to talk about things that frighten them. They want to talk about possible solutions. So if you're cold calling or you're talking to somebody that you've talked to before about their commercial shopping center, or you're talking about leasing space, about being their leasing agent, you know, it might be helpful to say, hey, have you thought about your insurance? Have you explored that? You know, I'm not an insurance agent. I'm not a lawyer, but some people believe that there's potentially coverage there and it's something you should look into. What I say is, for now, don't rule out insurance. The reason why I say this is because in terms of how insurance operates, the insurance company tries to prevent you from having a claim. And that's just a very blunt statement, okay? but they do that by having basically two tiers of defense in the insurance policy. One is whether or not coverage is triggered. In order to trigger coverage, you have to have what they call a predicate loss. In other words, saying that a loss upon which coverage is predicated. Without a covered loss, there is no coverage. If you get over that obstacle, they then apply exclusions in the policy. And often virus, bacterium, disease are excluded from coverage, as well as government action. So those things, when you put them together on that 1-2 punch, can often serve to defeat your ability to get coverage. But what I say, and I've talked with other insurance bad faith lawyers about this, and they agree, is that what we see in society when we've had any large scale change is that there becomes a lot of pressure on our courts to modify the law and to broaden coverage and allow claims to go forward. In the wake of the Northridge earthquake, January the 16th, 1994, initially, many insurance companies denied coverage. Later, courts reopened coverage, leading to massive claims asserted against insurance companies. Now, this is a little bit of a different concept because the basis upon which courts acted to sort of broaden coverage was different. What they said in that case was that the insurance carriers had failed to adequately investigate the claim, and because they had failed to adequately investigate the claim, they had wrongfully denied claims. And so they forced carriers to reopen those claims and allow people to come back and assert claims. That's probably not what's going to happen here. But the lesson that can be learned from the Northridge experience is that in the case of Northridge, you had to file a claim in order to have a claim later to enable you to obtain benefits. And so my observation is that if this Northridge experience is analogous, you should still be filing a claim today. It may maintain the viability of a future claim if the law changes to improve your odds of getting coverage in the future. Okay. Now, I want you to be really careful about sharing that with your customers or your clients, okay? Obviously, you want to say 5 times during that conversation, you know, I'm not a lawyer, but I'm not a lawyer, but I'm not a lawyer, and you should ask a lawyer about this, but you can just offer these things as saying, I've heard that this is a possibility, and it's something that you should think about. You may be leaving money on the table, okay? Let's turn now to contracts and the concept of something called force majeure. And this is really tricky because as a commercial real estate broker, I would think that in many cases you should be concerned about protecting your property owner so that it can collect rent. But you also represent tenants if you're doing any leasing, and they have rights too. And so this is an area of law which is getting heavily litigated today, and it's not exactly clear what the outcome is. Let's talk about force majeure first. Pardon me. Force majeure is basically the occurrence of an unforeseeable event which prevents one party or the other from performing under a contract, sometimes both. Normally, it's very, very limited in its application and scope. And normally, it doesn't apply to the payment of rent. In fact, in many leases, it is specifically designated as being something which is refined or confined to issues other than the payment of rent. However, a recent bankruptcy court ruling defended the assertion of the force majeure clause to the allegations of the non-payment of rent. There will be many more cases. And I believe that, especially here in California, that this doctrine will widen and will, in some cases, grant relief to people, possibly from the payment of rent, certainly from other contract duties, because of this idea that this was an unforeseen event, which no one could have expected, and therefore you should be relieved of the duty to pay rent or other things. There's also something called the frustration of purpose doctrine, which has been another issue which is being litigated today in courts concerning this landlord-tenant relationship. Remember that your clients must confer with counsel on these issues. A lot of them are long shots, but we don't know where courts are going to go in the future because there's a lot of pressure on them to change. Okay. Let's talk about bankruptcy for a minute. Bankruptcies are on the rise. The Wall Street Journal reported that in the first half of 2020, that bankruptcy Chapter 11 filings, which is a reorganization filing, were up by 26% nationwide. In the first 6 months of the year, there were 3,600 bankruptcies from airlines to retailers. The New York Times headline read, "A tidal wave is coming," referring to the onset of bankruptcy. On the right side of your screen is a quick and very short summary, and these are just retailers I picked that do business in our area. J. Crew, Men's Warehouse, Joseph A. Bank, Neiman Marcus, Ann Taylor, Catherine's, Borden Dairy, a company that's been around since 1857, Papyrus, Lucky's, that's the Lucky's Markets, Pier 1, Imports, True Religion, Soup Plantation, JCPenney, Tuesday Morning, Le Pain Quotidien, GNC, and Chuck E. Cheese. Chuck E. Cheese even filed for bankruptcy. So what we're seeing is a great deal of pressure on these kinds of tenants, especially on retail tenants and restaurant tenants. And so they cannot be discounted in terms of what's happening out there. I'm going to change gears now and talk about something else that's really important, although I'm going to address it very, very quickly. There's a much darker side to what's going on in coronavirus. It's not bad enough that we are all being impacted by disease, by fear, and by injury, and by our economic well-being being jeopardized. But on top of that, racist incidents against Asian and Pacific Islander Americans is on the rise. In part, this is being fueled by people who insist on referring to this as the Chinese virus and so forth. It's stoking racism in our society. And it's trying to instill fear and fear-mongering among us. The LA Times reported this about some of these racist sentiments being targeted against Asians. In a Sam's Club in Midland, Texas, a young man confessed to stabbing 4 people in a store because he thought they were Asians. One was a very young boy, was cut from his ear to his eye. The children were ages 2 and 6. He thought they were Chinese, and he thought they were infecting people with the coronavirus. The FBI warns of increasing hate crimes against Asian Americans. And ABC News reported that federal law enforcement is warning local law enforcement agencies about these actions against Asian Americans. Hate incidents are on the rise across the country. Look, everybody in this country, except for Native Americans, is an immigrant. No one here is a stranger to racism. We're not immune to racism or its evils. We all have to do our part to try to stamp this out. we have to remember to understand each other, to try to help each other, and that working together, we can fight this evil. Because COVID has no nationality. It's pointless to try to blame this on one group or another. You know, we win here by working together. If you see bullying, report it. There is a national website for the Asia Pacific Policy and Planning Council, which is keeping a tally on these incidents because they believe that by collecting this information, it helps to prevent these incidents from occurring, and it helps us to understand what the impact is on our society and to improve knowledge and understanding among people in general. So is this all bad news? Okay, and I have to, give you a little bit of daylight now because it's been kind of doom and gloom for at least the last half an hour. The same UBS investment report said this. At least, virtual becomes at home reality. And what it says is that all this activity has led us to be working more from home. We're going to have less personal travel for now, more in-home digital leisure experiences, and more shifts toward telecommuting. So for this audience, what does this mean? Here's what I say to you as a commercial real estate broker, as a real estate agent in general. It's kind of a trick question, and I always do this when we're face-to-face, and it's more fun when I can do it with a live audience. But basically what I say to you is that your job as a real estate broker is to look for change. Change makes real estate change hands. Change leads to the creation of business and the closures of others. When a business closes, another business should spring up in its place. Maybe not right away, but eventually. And so therefore, change leads to a real estate broker getting paid. There will be opportunities because of change coming to our society. Changing expectations will drive transactions in this economy when buyer and seller expectations stabilize. Think of the market as buyer expectations and seller expectations. If buyers believe prices are low, but sellers believe prices are high, is it easy to make a deal? Of course not. You've got a gulf between buyer and seller expectations. You have to bring those two people together. You have to convince the buyer that the property is worth more. You have to convince the property is worth less. And when the two of them reach agreement about what that property is worth, they then can make a deal, and that's when you get paid. Today, clients need you more than ever to understand the market. And I submit to you that in this frightening time, when you are out prospecting and talking to prospective clients, they'll be more willing than ever to talk to you about what's happening in the market. So use that as a part of your vehicle. You have to become more acquainted with the economy, what's happening with the economy, where the demand is, what the concerns are. And you have to be able to talk to your clients about their concerns in order to be able to help them to analyze what is the new data coming in our economy. And that makes you more valuable to them as their real estate broker. The other good news is that remember that even though we've had record unemployment, that interest rates are still at historic lows. Although unemployment is high presently, it's come down quite a bit with the distribution of the incentives to, through PPP and the other government programs. The stock market is extremely stable, or it's not stable, it's actually volatile now, but it's still very, very high. So there's still a lot of optimism in our economy. And these fundamentals are still pretty sound. It's not going to be true forever, though. But it does tell you, at least for the time being, that we're still in pretty decent shape to continue to do business. You should be aware of the fact that our habits are going to be changing, and be ready to talk to your clients about this. For instance, working from home, they're saying that a lot of people are looking when they're purchasing homes for what's going to be their Zoom room because they know that they're going to be working from there regularly. There's a lot more need for the home office space, And people are interested in preparing for that because they recognize that they're going to be working from home a lot more. As travel decreases, we're at least temporarily going to increase our spending in our home environment. That could be exercise areas, livable garden space, dedicated workspace. All of these things are going to be appetizing to the home user. And what it tells you is that you want to be aware of these things because you're talking even to your commercial clients about these changes and these trends, and be able to shed some light on that for them so they understand where the economy is headed. The truth is we're going to have some likely losers. I mean, for now, entertainment facilities and travel industry, amusement parks are all going to return to normalcy very, very slowly. There was a story that AMC Theaters reported a 100% drop in income for the last quarter. It's likely that Uber, Lyft, and Airbnb are going to have a slow return to former levels. What we do see, though, is a lot of people are getting sick of being at home, and now they're resorting to traveling again through Airbnb and so forth. But I still suspect that those numbers are down quite dramatically. Other sharing type businesses like Bird Scooters, they had cut their workforce by 30%. They pulled their scooters out of cities. What we're seeing is that anything that people have to use in a group environment, where you have to touch something that somebody else is using, that's going to have a very slow return to viability until, likely we have a vaccine. Businesses have to work together to fight to bend that economic curve, okay? We've got to grow used to these changes. We've got to help to stabilize these things. I think that possibly that what you want to advise your commercial clients is that they have to work together. Landlords and tenants have to cooperate in order to be able to survive COVID-19, and that we have to work with that and a more attuned and proactive government in order to be able to survive these times. There's other good news out there. Again, UBS observed that the home mortgage and housing market, or the U.S. housing market and the mortgage market, are defying gravity. The residential is outperforming the market. They believe that that's buoyed in part by the pandemic relief spending. The job losses in sectors where people are likely to be homeowners have been less dramatic than in certain blue-collar areas where they're less likely to be homeowners. And that historic low interest rates are driving demand. I think there's still a question about whether or not all this is sustainable depending on what happens to our economy next. Okay, so closing up, I just want to remind you that we talked about change is here. You have to embrace that change. You have to understand that change presents opportunity, and that gives you the chance to talk to your clients at a time where they really want to hear from you. I don't know about you, but we've all received cold calls at home from real estate brokers cold calling, right? And if you're not interested in doing something, it's really an imposition. But if you're worried, if you own a shopping center and you've got 40% vacancy right now, or at least 40% non-performing, and you receive a call from a leasing agent on your telephone, and they say, hey, I'm calling today talking to my clients about what's happening in the real estate market, what we foresee as far as tenancies are concerned, and about unlawful detainers and what's going to happen to shopping center owners. Does that guy or woman want to talk to you? They absolutely want to talk to you. They may not say it out loud, but they're concerned about the future. And you constitute a lifeline to them. You are a trained and informed professional. You can share information with them about some of their options. We talked about insurance today, and we talked about the idea that although the law is mostly against us today in insurance claims, it's very possible that those things are going to change. Similarly, in leases and contracts, there may be outs there for people to be able to avoid some provisions of leases and contracts. We don't know for sure yet, but those are issues being litigated in the courts today, and likely that concept is going to open up and change in the next few years. We talked about concerns about racism and bullying, and that we should all be vigilant about these things. And lastly, we remind you that it's not all bad news. There are a lot of fundamentals in our economy that are still working. that this kind of economy presents change and presents the opportunity for you to make phone calls to prospective clients and to clients, to restore relationships, people you've done business with in the past, talk to them about where they are and how you can help them going forward. So, in closing, my last advice is wash your hands, wear your mask, don't touch your face, and of course, above all, be careful. Okay. So if you need anything, you're always welcome to give me a call. I'm going to stop my screen sharing right now and see if there are any questions. Tomas, where are we?
Thank you. Thank you so much, David. I do appreciate your time. It was a lot of material covered. Very, very knowledgeable for sharing, all the insights with the impact of COVID-19 in the commercial sector. I totally agree with you about the key word that you said. We have to embrace the change, the impact. And I think this opens a lot of opportunity to all those commercial real estate agents to think outside the box. I mean, if a retail store closes for whatever reason of the COVID-19, there will be for the better, it will give us opportunity to open a different type of business. Going back to technology, the same thing. I mean, before the retail store was taking hit on the online shopping, you hear about stores like Macy's. They were trying to survive because the online shopping were killing their business. So what they did differently, you guys probably heard about the experience about shopping. You cannot substitute that with the online. Even though nowadays the online shopping, they're trying to add, like for example, a little bit more, like on the virtual reality. You see websites where they allow you to try things virtually. So that will enhance. I mean, to me, honestly, I beside the online shopping being convenience, I still like to shop going to the shopping center. Let's put it that way. There is nothing like, after shopping with your family and relatives, you go and you go to the food court, you spend the weekend at the shopping and then eating at the court. There is no substitute for that. Okay.
I haven't even been to the store. Does anybody know? Is someplace like Nordstrom, is it open? I don't even know.
Right, but but like I said, you cover a lot of stuff, and then it's giving us, by you giving us the insight of the impact of COVID-19, we get a lot of opportunity as realtors, like you said, representing both sellers and buyers, and trying to connect with the deal that will benefit both of them with the impact of the COVID-19. So at this time, I would like to open for Q&A questions. Does anyone has any question? Can you guys share it in the chat box? I see, let me see.
Yes, Joanne have a question, Thomas.
Okay, Joanne Ling. Okay, here's Joanne Ling. The forgiveness of back rent will encourage the default and not fair to those that pay. Will the lender refund the mortgage pay? And what is your suggestion for the landlord to pay or not to pay the mortgage? This is the question from Joanne Lee.
Thank you very much for your question, Joanna. It's actually very interesting. What these kinds of questions get to is our sense of what's fair in society. And it is actually a very kind of complicated question about, whether if you can't afford to pay your rent, should you still have to pay it? Okay. And that sounds like a dumb question, right? I mean, like, of course I have to pay my rent. I have to live in this place, or I have to, if I'm going to use this office, I have to pay my landlord for the use of this office. But that's what I was saying about democratizing forces. It's sort of the same concept of saying, let's defund the police. I agree with concerns about the police. You know, I grew up in Beverly Hills, and Beverly Hills is, you know, kind of an upscale community. But, you know, we would drive on the street at night and see the police cars pulling people over, and we would see that the only people pulled over by the Beverly Hills police were African American people. Okay, I mean, the concern about policing in America is a serious concern, and it questions some of our beliefs about fairness and about how we're treated in the eyes of the law, and the fact that we should all be treated fairly. But the idea of defunding the police, to me, seems like a very chaotic thought, because, you know, I always joke that to say no cops, no law. You know, if there are no police, then what stops you from walking into Nordstrom, picking up the nice leather jacket that you saw, or even cutting the chain that's securing it in its space with bolt cutters and walking out with it? You know, so similarly, this question about whether or not we should have to pay rent is one that has some, you know, arguably some foundation in this idea of like, well, what's fair when we're in an emergency like this? When we're in an emergency like this, should I get a break from somebody, you know, from somebody who has more resources than I do? But, you know, if you rent an apartment and your apartment building owner has a mortgage and you don't pay the mortgage, you don't pay the rent, then the apartment building owner can't pay the mortgage. Do we then turn to the bank and say the bank can't collect its mortgage money either? We could say that, but all these things continue to feed up the chain, right? The bank mortgage is likely a federally guaranteed mortgage, Fannie Mae or Freddie Mac. And does the bank then get to turn to our federal government and say, I'm not going to pay this money back to you because I'm not getting it from the borrower? And if they do that, where does the federal government get that money from? It gets it from taxpayers, or it borrows it, right? So, you know, these are tricky questions. and you know, I'm not trying to take one position or another, but what I am saying is that they're fascinating questions, and they're not as perhaps as simple as they sound like initially. And I think that the answer is that the truth is going to be somewhere in the middle, that probably we are going to see some relief to renters. It may be that, you know, if you have taken off 6 months of rent payments, that the landlord is still entitled to get it back, but that you have to pay the landlord back over 18 or 24 payments. The landlord doesn't get their money all at once, but they do eventually get their money. Would that be more fair? Probably. Probably that would be a reasonable outcome. It could be that, though, that the government acts to say that, no, if you've got 6 months off of, you know, with the non-payment of rent, that you're going to get a 50% forgiveness, and you'll only have to pay back 50%. That could happen. It's not going to be without a big fight in the legislature, but that could happen. So we really don't know what the outcome is going to be there. As far as your question of, you know, should I pay the mortgage? Yes, you should continue to pay the mortgage. I just think it's not because, you know, it has to do with any of these questions about what's fair or not fair. It's because if you pay the mortgage, you're not going to suffer a foreclosure. Will the lender refund the mortgage money you paid? Ain't going to happen. Ain't never going to happen. so don't even think about that.
Maybe what I think Joanne is meaning to in her question is that there will be a low percentage of people that will take advantage of the situation. And those are the things that will open up to lawsuits. And this is my take. Right?
There are certainly people who are going to take advantage of things. You know, what I say is if the law has provided you with certain rights, then you're not taking advantage of anything if you are exercising that right. But what we're really talking about is kind of a moral, ethical consideration. You know, is if let's say you rent a room from a little old lady and you live in her house, okay, and she relies on your rent payment to pay her bills. She has no other income. She lives on Social Security. And you turn to her and say, like, you know, the governor says you can't evict me right now, so I'm not going to pay any rent. Well, what happens to that little old lady? This is a little old lady that you know well, you see every day, you might have breakfast together, but because the government says you don't have to pay the rent, you're going to stiff her for the rent. You know, how does she pay for her bills? How does she pay for her medicine? How does she pay for her groceries? You know, we have to remember that we should take care of each other and try to do what's right all the time.
Right.
And I think that that's probably the best answer.
Okay.
Looks like we have a question from
the
Wei
next
Ming.
question is from Lee. Will the job market be more competitive after COVID-19? And then he starts saying a lot of businesses are lost and people can become chronically unemployed. Like college graduates may have a tougher time finding a job. So for some of us older folks, do we need to learn how to use the technology to handle a sale transaction? I guess this is multiple question. I don't know if you want to answer one at a time, David.
Well, let's say this. No matter how old you are, you have to keep evolving. You know, remember the dinosaurs stopped evolving and we know what happened to the dinosaurs. So Lee, don't be a dinosaur, okay? We want you to evolve with the times and learn to use technology and embrace it. One thing that's true in the 21st century is that we all have to continue to evolve and to change with the times and to keep up with changing technology. Don't be afraid of it. It's getting easier to use all the time. We think that hard times are coming. I talked to my buddy who's a bankruptcy lawyer, a friend of mine since I was in high school, and he said to me, yeah, I'm getting busy. The real business isn't out there yet, but it's coming very soon. Likely we are going to see a wave of bankruptcies. We are going to see a lot of people out of work. You know, we have been in probably the longest economic expansion in the history of the United States. And it had to come to an end sooner or later. We are technically in recession today. And it could be that that is going to lead to a cascade of problems that could settle in our economy. We're going to obviously try to fight that. You know, there's a statistic that says that 25% of all independent restaurants will disappear after COVID. And I grew up in a restaurant family. You know, my mom and dad were restaurant owners. My family's still restaurant owners. I care about restaurants. If any of you are my Facebook friends, you can see that about all my posts. These are important links in our society, and the problems are going to be widespread, likely. Let's hold on and do our best, you know, by wearing masks, by social distancing, by not breaking down and making mistakes that allow for the more frequent transmission of this disease. Those things hold us back from regulating and normalizing our society. You know, in Europe right now, people are traveling again. They can go about, I mean, they're wearing masks outside, but their economy is coming back. And it's really absurd in the United States that we haven't been able to master that.
Okay, there was a comment by Mandy to you, David, in regards to the malls. I believe the city ordinance, the open outdoor malls are open, but not the indoor ones. The indoor malls. I believe that's what she's trying to tell us.
Well, thank you, Mindy. I'm not going to do any more shopping in person yet. Anyway, I'm still shopping online. But and the other question was, what would we recommend for commercial tenants? Or, you know, I guess either way, either to the commercial tenant who's not paying the rent, or to the landlord who's not receiving rent. You know, there's an old saying that says you can't get blood from a turnip. And so as a landlord, you have to be intelligent and balanced. When somebody says, I don't have money to pay the rent because I haven't been open for 3 months, they're probably right. And so by forcing them to pay you rent, which you really can't with the eviction moratorium, by the way, any effort to try to enforce the lease by making at least in the city of Los Angeles, by making a 3-day notice or trying to file an eviction is a violation of the moratorium. So the better thing to do is to sit down with the tenant virtually and to say, okay, you know, let's talk about this. When are you going to be open? You know, what can we do about this? And what we've been doing with our clients mostly at this point, and most of our clients have tenants who have reopened at this point, is to say that, okay, so you're going to go back to paying the rent on the schedule. You owe us, let's say, 3 months of rent. let's take that money and aggregate it and then divide it into 12 payments and have you pay us back 1/12 of it each month over the coming year. We are trying not to forgive any rent because we don't believe we have to do that at this point, but we are being practical about when we can get that money back. And what I say to everybody, and this is something that I hope you'll embrace and use yourself in terms of your discussions with commercial retail clients. A shopping center, or for that matter, any kind of landlord-tenant relationship in retail, especially in retail, but arguably in other types of commercial, it's a symbiotic relationship. You live on each other. And a good commercial retail landlord understands things like tenant mix. If you don't know what tenant mix is, tenant mix refers to the idea that you have different types of tenants in a shopping center that help to create synergy, that help feed each other business. Okay, so if you have a boba place, it might be next door to the nail lady, right? Or if you have a shopping center, it shouldn't be all restaurant tenants. We've seen shopping centers where they're all restaurant tenants, right? There's a famous one at the corner of New Avenue and Ramona or Mission, where the Golden Deli is, where that is in San Gabriel. And they used to have like 6 restaurants in there. And so if you ever went there between 11 and 2 and 5 and 8, there's no parking. Okay. Other times a day, it's completely empty, right? Because you have too many restaurant users in there at the same time. You want people who bring users to the center at certain times a day, but not at other times a day. And you have to mix them together. What does that mean? It means that if you don't protect your tenants, they're not going to do well. And if they don't do well, they're not going to pay their rent. That is the essence of a symbiotic relationship. The landlord has a duty, not a legal duty, but a duty to himself, a commercial duty, to try to blend tenants together and to work with them in a way that helps them to succeed. If you're just a parasite, if you're just going to suck them dry until they die, you're not going to keep that tenant for a long time. And what we know about that is that turnover is what really kills shopping center returns, because you have to pay commissions to the broker, you have to pay for tenant improvements to the tenant, and then you're gonna have downtime in between tenancies. So you should be working with that tenant at all times. It's gonna be better off for you than to be having those people leave. Okay. Are we out of time?
David, next one is Jeffrey Hua. He says, you mentioned that most insurance companies exclude virus and bacteria from coverage. But what are so many lawsuits still being filed, and what are their arguments?
Well, it's interesting that you say that, because the answer is that I say that the only thing you need to file a lawsuit is $435. That's the filing fee in Los Angeles County, okay? You don't have to have a reason, you don't have to have an argument, you just have to have the $435. And if you're willing to sign what's called a declaration of indigence, you can tell the court, I'm broke, I don't have the money, and they'll waive that fee. That's a little bit glib, but a lot of claims are really baseless, okay, is the answer. They're being driven in part by lawyers who are attracting these things right now. And they may or may not have a viable claim. What I observed earlier, though, is to say that as a lawyer, you have a duty to file a claim, only those which are supported by facts and the law. And if the law is against you, then you have to have a good faith belief in a change in the law or a reason for that law to be changed. So there may be a reason for that, because as I said earlier, there's going to be a lot of pressure on the world of insurance, on landlords too, to modify how the law treats this kind of an event. And so although those claims are not particularly viable today, what we know is that later on they may be more viable, and that's probably accounts for why there are so many of those cases.
Okay, David, that was the last question, but I have one, and I meant to ask.
No question for you.
And then that will be the last one. So share with us the the most common or the top 5 cases that you're handling right now due to COVID-19 that you are, that you handle, can you share with us? I mean,
I'm not handling anything particularly that relates to COVID-19 except for amending leases for shopping center owners. And I've done a lot of those. We're continuing to do them now. On the other hand, almost everybody I'm doing business with has been affected by COVID-19. So I was negotiating a restaurant deal for a large restaurant in the West Side in the very upscale part of town. That negotiation ground to a halt in March, and we just walked away for 3 months. We just came back to it. Now the property was sold in the meantime to a new buyer, and we're negotiating the lease now for my clients to come in and build their restaurant. This buyer is a lot more flexible, recognizing what's going on out there and the fact that it's hard to find tenants, especially restaurant tenants. The other things we're doing is, I said, recasting those rent payments to be able to allow people to catch up and to make that more viable for them. We've got other situations where people are talking to us about, well, what happens if I go dark because of COVID? And we began to look at some of those changes. We don't give in on too many of those. All my cases in litigation have been stopped by the court system because of the timing, because the courts went dark. And what the court did was it vacated everything in its calendar and now is resetting everything. So it's pretty crazy stuff. It's like the grocery stores. If you closed all the grocery stores down for 6 months and then reopen them, what would happen? The lines in front would be a mile long, right? So that's a lot like what's happening in the court system. And so we have been dealing with that and trying to get caught up now.
Okay. Thank you so much, David.
Thank you, everybody,
for sharing all these insights about commercial real estate.
Well, thank you. It's good to see you. I'm going to bail out on your pitches, but I hope you all stay safe, okay? And remember, don't touch your face and wear your mask.
Okay.
Thank you, David.
Thank you, everybody. Bye, Pauline.
At this time, we are open to pitching. If anyone has anyone beside me, I have one, but I want to give the opportunity to others to pitch their listing. Does anyone has a listing to pitch? Going once, going twice. No one? Okay, phone, allow me to share my listing, please.
Go ahead, you can share.
All right, so I have.
I see it, Thomas, you're good.
You're good? Okay, so David was saying about change. This listing is a commercial property. It's a commercial property that the tenant is the enterprise sales and leasing. It has been renting this place for over 20 years. And as you know, due to the COVID-19, they were forced to downsize their operations. So right now, instead of having multiple branches throughout San Gabriel, they're downsizing, I don't know to how many. So right now, the owner decided to put it on the market. It will be on the MLS this coming Thursday. The tenants, they will move out by early September. So the owner, the new buyer will be able to move in. So this is a good opportunity. It's a very visible corner lot between Valley and Chapel. The property type is can be retail store, a specialty, or office. The building size is only 400 square feet, but the lot is over 7,000. The zoning is ALCPD. If you look into it, or more details in the Alhambra Planning Commission, the zoning allows you to do different types of businesses. So this is a great opportunity to bring investors, whether they want to do a totally different business. They are welcome to contemplate that. The asking price is a little over 1 million and change. The seller would like to assume he's willing to carry up to 75%. So everyone is welcome to drive by, or if you have any question, just call me and I'll be more than happy to answer any questions. So this is a great opportunity. Like I said, there is a lot of demand for open spaces with the COVID-19. You can imagine, I mean, you can think about what other businesses can be appropriate to reutilize this corner lot. Okay, that's all I have. Thank you.
Thank you, Thomas.
Back to you, Pauline.
Thank you. Before meeting adjourned, I just have a quick reminder. We have upcoming very nice classes, and mark your calendar and register right away. The first one is a Thursday, 9 a.m. We have an Emma's breakfast meeting, have a new program to introduce you. And continuously at 10:30, very important, please join our membership general meeting. We have important announcement from the board of director to you. And the next Tuesday, Savor at Home and Learn. We have anything Chicago title, bring to you, moderate your farm and get more business in these times. And the next Friday, 11 a.m., Global Business Council present you GBC number 8, Cambodia, the new opportunity for the real estate market in Cambodia today. And another week, next Tuesday, we have Mr. Wei-Ming Lee give us very hot topic, ADU update, and hope every one of you join our upcoming meeting and we learn and let's match the changing. Thank you, and back to you, Thomas.
Okay, thank you. Thank you so much for everyone attending this meeting, and we will see you next month for the next coming webinar, commercial webinar.